What's going on, YouTube? Time for a little recap. We're off the chemo treatment for my stage 3 cancer, feeling a little bit better as we pound out some videos. I know they're few and far between, but we'll get to it. Today was a pretty solid trade day. I want to go over some of the zones and how we got them from yesterday and today, and kind of what happened. So first off, we do have a really big zone, 454, about 30 to 50. We called the bottom yesterday with this blue zone. We have a deviation center hit. There's a couple different reasons why this zone was used. I'm going to grab the trading view here real quick, and we'll go over that. So this orange zone is a zone I'm talking about. You can see yesterday's bottom right here. This orange zone was defended multiple times with multiple POCs. So as you can see here, a few days prior, draw tool here, get her back over here. So here and here, so we have two different POCs that we were working with on priors, which are really big squeeze points, right? Because even if it dipped under it, right, got a little bit of fresh flow, it did end up squeezing a pretty large amount there from that same level. So this is a double POC. So we kind of just zoned out both POCs here. We just made a channel of it. And then if you got to look to the left even further than that, we didn't even need these two POCs. If you look further back, we have a really big defense zone right here in the support into another POC. So the whole area right around 454, 50, and 30 we had called the bottom for yesterday was extremely strong. Now today you see a blue line right here, and I was very adamant on 400, about 55 or so, and that's what we call today over under, and we'll go over the fibs after this. But this is a 30-30 POC on SPY. So on the 30-minute scale chart here, we're going to slowly move this back out. In the last, I'd say 4 or 5 trade days, let's see, from 22nd all the way to about the 6th, a little bit longer than that. We have a very large 30-30 POC, okay? Now that POC obviously is overlapped with a couple other POCs even here, boom, boom, 2 of them, and that's also going to give us our intraday support for this morning. So you notice this blue line at 455, again, was a 30-30. So what we do is we go on the 15-minute chart or the 30-minute chart. We're going to grab these POCs and we're going to extend them to the right. We're going to use these for multiple days to come, and we're going to zone them out if we have multiple overlaps on them, right? So the trade zones here for highest volume, which is the height, right, of the volume profile here. Some of those ways is what we're going to use for over-unders throughout the day, right, all through the trading, because individual days on high volume trade will often give you these amazing levels to use for over-unders, right? It's just a help in direction. Nothing is guaranteed in the market. It's always going to do what it wants, but so let's go back to TOS real quick here that we can kind of see where the fibs are. Now, this was a 2-part trade, and I was confident in long short off the 455, right? We wanted to go see some trend above, a trend below. Now we have a high right here, 459.65. That comes in on 12 once candles. So what I did was I took some Fibonacci here, and all I did is I pointed it down, and then we used 455's volume, right? So we have our old 454, 30s to 50s blue level. Right above that's 455. So some really big zones there. What I did is I wanted to see a back test of the 100 fib if we opened up underneath that in the morning, right? So we're going to go look at pre-market now. And this is what we ended up getting. So 455 was our over under. We knew that from the start. Now, if we were above 454.50 and the deviation center, which we had bounced yesterday, we weren't really looking for anything short. We were actually going to force back up to the Fibonacci point of interest right here that we had just talked about. So the 100 fib, right? Because this morning you can see in pre-market where it came back down, came up, tested. We got resistance right here on that fib, came back down to support, held, pushed up again, lower high, but again, inevitably just holding the zone. So the split here was 455, right? So that was one of the biggest areas of over under from the 30-30 POC I would have used today. So if we put a white level right there at open, we had a couple different things to help us out with the long. So we had a really good MAC cross at the open, had a really big continuation squeeze, and we wanted it to force up to 455.76. And if it got inside that fib, we were going to run to the golden pocket, right? So if you know my Discord, we said we called this right here 457.44. That is a golden pocket top. So if we trended above, this is target 1, and this is target 2. So what you want to see is a 455 support defense. And we had that for about 15 minutes. You see the MAC put in a small way, start to push back up a little bit. And this is the data candle, okay? So we had data today that forced us back up. Jolts ISM. Tomorrow's ADP, so we're going to see how that goes. But this force up got us inside the fib range, right? So now we're inside the fib range. And the big long that we had called here before we got off live was look for a back test after the data push to support, to maintenance support, right? Above that 100 fib. And then we were going to go to the golden pockets. We call the long back down to here. Here's your wick. Boom. Perfect to the T. Back over POC all the way to the golden pocket. And whatever happens after that doesn't matter to me because that was the last day trade. So on the ES, we were getting long here, and we actually had about a 13-point move here. And then from the bottom, if you took it from 455 up, we had a couple orange waps too. We had another 18 points. So two very, very decent trades in a very static day. So for the rest of the day, we didn't really have a whole lot. We defended the 10 SMA daily, which you see in the dashed blue right here. That's in our intraday charts in the 5-minute, and a few other things. So we had a little bit of a falling wedge here, lower high, lower lows, and then of course that snapped right back up and just kind of went static sideways. Now we're kind of in a dead zone. We got not a lot of data besides ADP, and of course Fed speaks are in a blackout and so on and so forth. But for those little details there, I want you guys to get a good point across to using these POC zones and using those volumes on the longer standing time frame, something like a 15 or a 30, and then applying it to a 5-minute intraday chart so you can start getting those levels and see the over under kind of evolve. Because once you have an over under level, it is most beneficial to start using the intraday oscillation indicators, right? So if we're looking at some of the stuff like MAC and RSI to try to help us out, even on a 1-minute or 5-minute time frame, and we use the VWAP bands, those are stellar, right? So coming into like some of the VWAP supports here and squeezing up, obviously that's a data move, but the whole move back down was back testing, our tried and true 100 EMA, 200 SMA. We have a 10 SMA daily. We just had a monster amount of support on this call right around here. This bounce as well. And then once it just kind of leveled out, did a whole lot of nothing sideways for the day. But get used to those POC zones. We'll start pounding these videos out for the rest of the week as I'm starting to get a little healthier here. And what's coming for tomorrow? Well, it's all about the fib, right? So if we do maintenance again, out of this huge 100 fib we made, 455.76, which is a major level we called. Anything above that, we're going to start coming back up. And if we start getting over the Fibonacci levels, right, as they come, we're going to start pressing up to the 0 fib, which is going to fill the body of that candle, which we fibbed out. And it's going to be a huge, huge, huge move back up to continue the squeeze, because we've been calling all-time highs for quite some time. Off the FOMO rip rally, once it recovered over the 200s and the 666, it was game over on the MAC cross, and the market can stay hot on a manipulated force up for much, much longer than it can stay cold. So as this thing slowly develops into a potential pullback, that's one thing we need to see. Chart's a little messy here. One other thing I did want to mention here is what we had seen yesterday, just to so you guys know, the Qs. Now, the Qs had a gap tag. So you see this giant purple level. If you go to daily chart, you can see that we had a fancy gap. And our rules here at the elite side of trading and Morland trading, we know that the first gap tag, no matter what, pulls an opposite move coming from bottom or top, doesn't matter. So what that means is we have a gap right here, and then we pull away from that gap. The first time we push into that gap, relatively a high percentage chance it'll snap back the other way, and it will not attempt to fill first tag at all. Okay, so even in hindsight, if you go back to some of the other gaps in history, and you can test that theory, of course, obviously, very easily. So every time you see a gap like this on a SPY chart or a Qs and it loops, and then you start seeing it, that is a short entry on the first gap tag that it has, right? So you see it right here, it get pushed up into the gap, no fill, complete wash. We had 2-3 days of a pullback, and then a big old random candle day coming back and push too. The algos don't like to fill those gaps the first time, okay? And that's tried and true on a ton of these, not even a ton, just a metric ton of these. So no matter how long either that it takes for some of these to draw out, it's a higher standard here, right? So here's one, and this is a pretty rare occurrence here, that had a single day next fill. So what had happened here is a gap. Holy moly, how did that happen? The auto sizer there. We had a gap here. First tag, big rejection. Next day opened up way up here into the gap, filled it, and then filled back down. So the rule still applies. The first day was still a rejection day, but the next day following, sometimes you'll get that monster move back up. And no matter what you do and go back and look at this is a very solid lesson, because we're very huge on gaps. So every single time you see, it's a no fill, no matter what, first day tag. And yeah, this one is a multiple one. So again, first time right down here, open up all the way back down, stopped. Again, stopped, no fill. None of these were until we had another gap and forced into that. So again, they just never really happens. Good day to sell options. Good day to Sell a lot of different things, actually. I like to sell a lot of puts and calls at the gap levels, ODE, on ES or NQ whenever I see these gaps. Here's one more example just for funsies here. We do have another large gap right here, and I can already see the wick back there. No tag. There we go. So again, a no fill there. So imagine opening up here, going all the way to no fill and then sucking all the way back up and then getting slammed the next day for the fill. Again, another one first day tag back to the gap. So nothing touched that gap until the day one, still no fill. There's not going to be many gaps, if any, that you're going to find that have that kind of history to them. They're going to have those fill points. And SPY even has, a lot more of them. But as you go through and pick those up, pay attention to those gaps. And if they overlap and start measuring with POCs, like large volume controls and so on and so forth, there's just so many things to pay attention there and overlapping. They're just such a beautiful thing. This is one of the shorts that we called on SPY here. Here's another beautiful example. SPY, first tag, no fill, no fill, no fill, no fill, huge down, right? Then another one here, no fill, and then obviously we have the gap and go rally. So as Qs kind of came into that first gap that the Qs had, we knew that even today we had a potential green day because of that, following out of POC zone because of the first tag. And we knew yesterday where the bounce point was. We actually called the very bottom of that bounce point, thanks to POCs, thanks to the gaps on Qs. But that's about it. So tune in for the next, and we'll catch you then.